So price does not matter because silver is going to go through a failure to deliver. And when that happens, you either own silver and have it or you don't. You're either in or you're out. I mean, you've got $75 silver in New York, in London, yet you've got $80+ silver in Shanghai, uh, higher in Japan, higher in UAE, Dubai, all over the world. The physical market is trading above the cash market. I'm sorry, above the futures market. If you hold gold, if you hold silver, you're going to be like a bank because these governments are telling you that gold is money. They're just now telling you that silver's money. So if it's money, I mean, they can't bankrupt. That's where you want your capital. When a spot price trades above the futures price, it's called backwardation. That should never happen because how could an ounce of gold be valued today less in the future than it is today? It can't be because there has to be some time value of money. So that's a very rare occurrence. But what you're having happen now is you've got backwardation between markets themselves. Silver, the big demand is coming from industrial use. But the point I'm trying to make is you have the paper markets and the physical markets separating. If you want to call that backwardation, you can call it backwardation. But what it tells me is that the paper markets in short order are going to become irrelevant. Everybody's worried about price. Forget about price. The bottom line is, do you own it or do you not? How many ounces do you have? You're going to count your net worth in the future in ounces, not dollars, not yen, not euros. You'll never be able to get in. There won't be physical metal for you to buy with fiat. Fiat is not going to be accepted for physical metal. So don't worry about price. Just get capital out of the system into metal. Metal can't bankrupt. The system is bankrupting. What you're going to see is the greatest deflation in all of history of paper markets, even real estate. Across the board, it's going to be a massive deflation versus gold and silver because gold and silver are money.
Former Wall Street broker Bill Holter warns that the paper and physical silver markets are violently separating, with global physical prices now trading above futures, a rare condition signaling imminent systemic failure. He argues that COMEX will experience a failure to deliver, triggering force majeure and a default that will make physical silver unobtainable at any price. Holter urges listeners to stop thinking in dollars and focus on accumulating ounces, as net worth will soon be measured in metal, not fiat.
I mean, optimally, you want 60-70% plus in gold versus silver during normal times, but we've not had normal times or a normal gold to silver ratio, probably for 30 years. So silver has been the target. Silver is where I believe the failure to deliver will happen. And the bottom line is once it fails to deliver, you're either in or you're out. You're not going to be able to alter your position. So, I mean, junk it's the best form for an American to own, and it happens to be the cheapest form currently. I mean, it's cheaper than any bars, any rounds. It is the cheapest form. And the reason it's cheap right now is because of the run up in price. You had people that bought back in the 70s and 80s, and junk was really the only way for Americans to buy silver. A lot of that's coming out of the woodwork. People saying, oh, I finally got my money back, or I finally made a profit. Lots and lots of junk silver this past year was sold. Dealers backed away from it. If they're bidding $5 or $6 under spot, they're sending it to a refiner and they're pocketing that $5 or $6. In a system breakdown, where you've got financial markets either having a problem opening, functioning, or not even open, with a societal breakdown, and that's where this is going to head to. With a societal breakdown, what good is a 100-ounce bar? I mean, what are you going to trade it for? How do you trade it? You can't. Um, the problem I see with bars of any size, 1 ounce, 10 ounce, 100 ounce, the problem I see with generic rounds is that how are you going to prove it's real silver? In a system breakdown, how do you authenticate that? In a The way to authenticate it is junk silver. Everybody knows what a dime, quarter, or half dollar looks like. As long as the date is 1964 or earlier, that authenticates that it has 90% silver. You could drop a dime or a quarter on the counter and it's going to sound way different than a current dime or quarter. When this thing melts, when the whole system melts down, all the leverage is going to break. I mean, stock markets, bond markets, real estate markets, they're all held up with leverage. But guess what? That same leverage was used to suppress the price of gold and silver. So the way to close the gold and silver positions for these institutions, they got to buy. In my opinion, what they'll probably do is just raise the capital gains tax to 90%. Yeah, you don't want to keep your stash all in one place. You want to have somewhere you can get to it. You might want to have 2 or 3 different vaults in the United States. You might want to have a vault outside of the United States. I personally store some in North Dakota because that's the only state in the country that's not part of the Federal Reserve System. Now, does that guarantee that my metal can't be confiscated? No, it doesn't, but it makes it more unlikely that a federal agent would ever be able to walk in, a banking agent, and say, tell us who your customers are and what do they have, because they don't have standing in North Dakota. But just don't keep it all in one place. And I mean, even if you don't have a big stack, let's say you have, I mean, if you have a small stack, hide it, be ingenious, bury some. Yeah, you don't want unallocated metal. You want allocated metal. Your metal is your metal. It should not be intermingled with anyone else's.
He details why junk constitutional silver is the optimal form for Americans due to its recognizability, divisibility, and U.S. mint lineage, which offers protection against confiscation. The interview covers the great taking, where client assets at brokers and banks will be seized to recapitalize failing institutions, and provides urgent strategies for securing wealth outside the bankrupt financial system through allocated segregated storage in multiple locations.
Yeah, I think at 55-56 ratio, I think we're in no man's land. When we were in the 70s, 80s, up to 120, I mean, that was a no-brainer. You buy silver, and at a later date, you sell some silver and swap back the gold, and you'll get more ounces than what you would have had you bought the gold outright to begin with. So as the ratio comes down, I've said that I think people need to move in tranches. If you're looking to move X amount of dollars or X amount of percentage of your portfolio, I would do a quarter at 50, a quarter at 40, a quarter at 30 to 1, and then the last quarter you do as just a gut feel trade. You're not going to be able to pick the bottom, but if you do it in tranches, you can't be wrong and you can't be right, but you'll be better. You'll end up with more gold ounces than you would have if you didn't do that. Sequestered, confiscated, whatever you want to call it, 300 billion of Russian treasury reserves, U.S. treasury reserves that they were holding. That was outright theft. And from that day forward, gold started moving higher because nation after nation looked at that and they said, if they could do this to Russia, they could certainly do it to us. So that was the beginning of this move of de-dollarization, if you will. Going in and basically just taking over Venezuela, it's not a good look. I understand what they're doing, and it will. They're trying to get. What they're trying to do is they're trying to get assets that are not encumbered that they can use as collateral, and obviously the oil and the gold and the silver, whatever other commodities in today's world. What happens is that. That stock is owned, it's on the books of your broker for your benefit. Now, if the broker gets into trouble and they become insolvent, your shares are on their books. Your shares will go to pay their creditors, and you're out of luck. Same thing with banks. When you put money into a bank, you're no longer legally a depositor, you are a lender, and you're the most subordinate lender there is. So you're only going to get, you won't get anything, but when the system comes down, it goes tranches. The most senior, the next senior, and then the subordinate is on the very bottom. You get, if there's any crumbs left, you get to fight over those. Back in close, 2002, 2003, and I wanted it delivered out to me in 2006. I got 2005 coins. So I was paying for segregation and I didn't get it. You don't want to be you don't want to be in a pool. You do not want a pooled account. You want a segregated account, uh, plain and simple. Because a pooled account, it there's you want your own metal. Your assets are going to be used to try to support banks, brokers, insurance companies, financial institutions. Your money is no longer yours. Your money is being held by intermediaries. It's on their books, and when the intermediary fails, you're going to lose your assets. It's basically an industrial metal. And if you get to the point where uh, the real economy is upside down and basically, I don't want to say closed, but severely hampered, the demand for platinum is going to drop. Platinum is not platinum nor palladium are considered precious metals. They're not considered money. Gold and silver are money. The reason you want gold and silver is because they are monies that cannot default, and the system is not tenable, and we will go through an insolvency default. The system itself is in the process of defaulting. I mean, the bottom line is it will take you fewer and fewer silver ounces or fewer and fewer gold ounces to purchase the same thing over time. It's been that way since the bottom, uh, if you want to call it the brown bottom. That was Gordon Brown when they sold the last tranche of the Bank of England gold back in 1999. That was pretty much the bottom, and we've been in a deflation ever since. I would ask you to go back and remember what happened in April of 2023 when those three banks in California went down on a Thursday or Friday. I was on a short trip. Uh, Turned out really not to be a trip because the phone started blowing up. People people were scrambling to buy metal, and by Monday morning, no dealers had any metal left in stock. And I mean, we were taking orders with the promise to deliver in 6 weeks. Now, that probably made people shudder. But if you pay 90% of your capital gain, and that's assuming you even have a currency at that point. But if you pay 90% capital gain and everybody's lost everything, but you have your original cost basis, plus 10% or whatever, who's the winner? I mean, you're still a winner. You have capital. And it's my thesis that when this thing busts on and begins to bounce back, when the system begins to right itself, you mentioned squeeze. Squeeze is that looks toward price. So have we been in a squeeze? Yeah, absolutely. The price is going higher, but the danger is that there's more delivery demands than there are ounces in inventory to deliver.